you know, there's the time to deal with. I'll go until they all break, right? But I will show you my plan B. Yeah, you can see this monitor here is turned pink. So after I'm done my webinar and after done trading, I got to get behind the rig and figure out what's going on. But Kenny's saying maybe it's time to switch them all out and just go to 4K screens. Yeah, maybe, but not quite yet. But I'll show you my plan B if you want. If you remind me, plan B for my new trading rig. And it would only use 3 4Ks. But if you remind me, I'll pull up the website and show you. So anyways, let's get going. It is a Wednesday. It's Fed day, so nothing's likely to happen until the meeting. And then all hell's likely to break loose. And then what? BOJ. So BOJ's tonight, New York time, and tomorrow everywhere else. Oh, and RB&Z and all kinds of things going on, right? Wayne, do you get a flat for this meeting? Yeah, no. So anyways, oh, do I go in or do you go in or that's your call, Fred. Yeah, well, what I do is irrelevant. What you need to do and make your decisions. You ain't me and you don't have my clients and all that kind of stuff. But anyways, let's get going. It is, like I said, it's Wednesday. It's 7:41 in the morning. Time to get started. Let's clean up our workspaces and get ready for the day. Miles says, do you front run? Well, that's a whole different strategy. What if I was in a dollar trade 3 months ago? Am I going to get out now? Okay, so it all depends. All of it makes sense if you think about it and develop the strategy ahead of time. So anyways, welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, if you're watching this video on YouTube, please leave a comment, leave a like, ask a question, do all that kind of stuff. Make sure you subscribe. Also, you can attend these sessions for free. Just go to Forex.Today or TradersWay.com and register. Easy peasy lemon squeezy. It's free and it's awesome. By the way, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. We're an ECN. We execute your trades quickly and affordably without any drama. No drama, mama. We do these sessions every single day, 7:30 in the morning, Monday through Thursday here at Forex.Today, and every Friday at FX Street, where I am the one and only Forex Speaker of the Year. And yeah, and guess what? In a couple of weeks, first Friday of May, we will be hosting the 120th month of my webinar called Trade Non-Farm Payrolls Live. 120 months, dude. That's like almost 10 years. Wait, that's exactly 10 years. Which is amazing because I'm only 14 years old. Yeah. Just crazy. Yeah, I was a prodigy. Yeah. My rhymes are tight. You wish you could. So anyways, let's get going. So I propose we keep it short and sweet today. I can answer your questions for show. But it's all about the Fed meeting and whether they change their language. And if they change their language, it's going to be to hint about a June rate hike. Okay? And that's it. And if they change the language to make the hint, the markets move. If they don't, the markets move the other way. Right? So if they change the language to say, yeah, you know what, we're thinking about raising interest rates in June, the US dollar gets strong, euro dollar comes down. Okay? That's it, right? But if they don't change the language and it seems like June is not on the table and that they're going to wait till either October or December, then dollar gets weak. Euro dollar goes up. Okay. Ryan says, I have a quick question, Wayne. How do the markets price something in? They make the trade ahead of time, Ryan. So you want to price in a rate hike in June? Sell euro dollar. Boom, you priced it in, dude. Because fundamentally, let's talk about that. Fundamentally, you're making long-term investments based on what you believe the market's going to do in the future. Fred says, okay, 70% of the economists say rate hike in June. All right, well, what economist, Fred? How about this, Fred? 70% of economists are stupid. How about this? Here's a funny one. 70% of economists are below average. Hey, you're like, hey, how's that even possible? Well, they're economists. They're not traders. If they knew what they're doing, they'd be traders. What do you want to make? $40,000 a year being an economist, or $400,000 a year being a trader? But anyways, but so who cares what analysts think and who cares what economists think? Who cares? So why don't we just see who matters? Let's pay attention to the markets. So Fed Funds Watch. Here it is. All right. This is the opinion of traders, not economists. And the economists are probably just quoting the traders anyways. So let's just get into this. All right. 0% chance of a hike today. All right, June, 23%. Boom, I'm done. So 70% of economists are below average. Okay. You see that? That's how long it took me to do my analysis. Okay, this is the Fed Funds futures market. These guys are trading the money market, if you want to call it that. Very, 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 very short-term, risk-free instruments. It's pure cash. It's the closest thing to cash you can get. And the smartest money in the world is trading this. Not opinions, trading it. Okay? Okay. And the way that they're trading it, because they're pricing in interest rate changes. Remember, if interest rates change, if they go up, and you're already holding a bond paying the current rate, then now your bond is worth less than all the new bonds. It's like you buy a Ferrari, you put 10,000 miles on it, you can't get the same price anymore because someone else can just buy, you know. Does that make, maybe that's not a good analogy. How about a used Ferrari? One's got 10,000 miles and the other one has 25,000 miles. You can't ask the same price. I don't know. Whatever. Yeah. So anyways, this is not likely to happen. Okay. According to what smart money thinks. And smart money is putting money where their mouth is. I mean, these are, right? Yeah, it's just the market. It's the money market. Okay. So you could buy Fed funds futures. Sure. Okay. December hike, 71% in September, in December. Okay. So pretty good chance they're going to raise interest rates in December. June, probably not. So I keep talking about October. There's no October meeting, huh? Guess this is the one I'm thinking. 50-50 even by then. I thought there used to be an October meeting, maybe. Yeah, even November is only 50% chance, guys. So the market says, yeah, December. Okay, that's what the market's thinking. One hike per year every December. And remember, it's not what they're thinking. Those are actual prices based on what people believe with all known information right now. Cool, huh? Yeah, or they're priced in. Thank you. So anyways, that's where we are. What we're most interested in is will the Fed say something to change this? Okay? That's what it's going to come down to. So, pay attention to this maybe, huh? And there's some language in there about, here, why don't we do this? Let's go look at the past minutes. What's the phrase? Let's do the PDF version. And let's do the HTML version. So it's only, it's a short statement, right? Consistent, inflation is expected to remain low, blah, 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 blah. What's the language they're talking about taking out? We're going to do it live. I don't know. Maybe, I'm a pretty busy dude. But I'm thinking if I do it, maybe I'll do it on the Forex.Today YouTube channel. Maybe. So anyways, we'll see how the market will respond to this. There's a little statement in there I think people are watching, but I forget what it is. Who cares? So the market's going to respond, and you'll know. Nah, Ryan, I don't got time for that. Again, I don't expect much out of this meeting. So and even if this meeting surprises people, it'll be about the next meeting. Okay. So I don't know. I'm just going to let it happen. Okay. I'm going to bite my lips and close my eyes. Take me away to paradise. So we'll see. The market will move, and you'll know, and then we can talk about it. The other way, you can also, refresh this page and see this change. Yeah, the BOJ is going to be interesting as well. So news overnight is Aussie. Let me do Aussie yen. Why not? I just did an interview where I said I thought Aussie was going to go up, not necessarily today, but in the next 12 months. And then Aussie CPI, big disappointment. And who would have thought? Hey, check this out. Daniel, yesterday, pointed out that we were at a double top and getting ready to drop. And Daniel set you up for this. Boom! Yeah, thank you, Daniel. So everybody should leave Daniel a thank you. Remember, he's a human being, not a robot. So he took the time to set that up for you. So he said, now it's time for the bears opportunity to sell at the double top area, which he highlighted. Weekly pivot point 86.29. 86.29 is right here. Oh, snap! Whoop, 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 whoop. Thank you, Daniel. Yeah, Daniel does like cohibas, but he wants them sent to my place. Yeah, no, Daniel's a good boy. He doesn't smoke cigars. Yeah, I'll make sure you get them. All right. So, anyways, right on, Daniel. So, this was a big CPI disappointment, and some would interpret this with the RBA wanting to lower interest rates. You know, this, you know, I don't know. This is a debatable one, right? It's a debatable one. What gives me pause is the difference between, you know, the Australian economy now versus what happened in the past versus what's going to probably happen in the future. And I'm thinking about things like a rebound in commodity prices. Maybe it's too early for that, but so in the interview I talked about Aussie dollar and well, the RBA and the Bank of England over the course of the next 12 months are probably going to be, you know, the next in line to raise interest rates, if at all, right? And so, you know, has gold at 1100, actually it was 1050, right? Gold at 1050, was that the bottom? Oil at 26, was that the bottom? You know, how about wheat? How about copper? And then specifically to copper, wow, that's copper. Okay, and then specifically the other things you should look at for Australia besides gold is iron ore and coal. Okay, so maybe we can look at that. Iron ore futures price. Wait, this is going to bring up some weird thing. Hang on, let's see. Yay, a website with tons of advertising. Yay! And no chart. Thank you. Price. I should put in chart. Hang on, this isn't working. How about we'll try Bloomberg, why not? Futures. Yeah, I'll put it up so you can see. Give you some eye candy. We'll do some quick fundamentals here. So I click futures, nothing happening. Huh, it just refreshes the same page. Weird. All right, menu. What is this? Markets, commodities. Try that. Okay, so gold you should know, silver, other precious metals, no. Copper, zinc, aluminum. Well, let's do copper. Copper is a big one because it's used for electrical components and plumbing and all kinds of things. So let's look at the 5-year. How about 1 year? Okay, can you see that? I wish it was a little better. Okay. Oh, maybe one click too many. I've been accused of less. All right, there we go. All right. How about that? Yeah, they're constantly changing things around, Gabe. All right, now take a look at this. This is April to April. So this is 1 year. And we have not made a low this year since January. January 15th was the low in something that seems to be a pretty big downtrend, huh? What do you think? Have we printed bottom? Do you think the psychological level of 200 was important for copper? We got down to like 194, and now we've slowly but surely made our way up to 225, 230. What do you think, guys? Hmm? Could be a rabbit. No higher high yet, but no lower low either, right? But good point. But this should be an area to watch, right? Because if we get above, let's say 250, this is long and gone, right? So at what point are you going to play it? Well, let's say it does come down. Wouldn't you be thinking triple bottom here, maybe? At a very least? Is the world really getting worse? Are we worried about Greece, right? What were we worried about last year? The Fed tightening, we were worried about Greece and all these different things, right? The China collapse. A lot of those worries are not that big of a deal anymore, right? Well, we weren't worried about China up in here. That was more of a, let's sell some newspapers in November kind of thing, right? Well, Kenny says there's an oversupply issue. Yeah, well, there's an oversupply issue of everything. So do you want to play, yesterday's trade or tomorrow's trade, right? And the thing is, at some point when prices come down, 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 suppliers stop supplying. Prices come down, which makes it more affordable for those that need it to buy it. And, at some point, maybe there's a recovery, right? And the beginning of the trade is identifying the bottom, knowing when you should stop selling rallies and start buying dips, right? So I'm thinking, like, is this the bottom? And if so, should we be buying dips? Right? Look how it came back down to 200 supported. Right? So, because the beginning of the up is no more down. Okay, so that's just copper. Where do I find iron ore? Where do they put that down in industrials or something? Commodities, energies, men, not agriculture. We'll probably have to look at the commodity index for stuff like that. There's energy, industrial, gold, silver, copper, platinum. Let's do wheat because Australia produces a lot of wheat. Ryan says, should we not wait for a reversal pattern or a breakout? Well, that's your alpha. Sure. If that's what you want to do it, right? Right, that's going to be your decision-making process. All right, so now this, they're having, poor Bloomberg is having problems with this. Does anyone have an iron ore chart? I'll try one more time. All right, not the prettiest chart in the world, but let's try this one. Okay, here's this one is from Jimmy. Thanks, Jim. And apparently this is iron ore. Iron ore monthly price. Let's go out 1 year. I guess it probably is 1 year. Okay. So once again, what do you think, guys? Does this seem to be a bottom? Notice this is the December January period, the same place where iron ore flipped, or I mean copper flipped. No lower high, sure. But again, you need to make your decision, right? So the higher time frame. So how would you do this? How would you analyze this? You might say, Wayne, well, the 5-year trend is down, for example, right? But couldn't somebody say, well, on the smaller time frame, like daily or weekly, isn't this making a series of higher highs, right? You might be right. This might continue in the direction of that longer term trend. Okay? You might be looking for that at resistance or something, right? But do you think commodity prices are going to fall forever? Right? So that's what you have to think about. When Europe recovers, China recovers. When China recovers, commodities go up. Kenny says when iron is scrap, it's worth nothing. Well, that's not why I'm looking at it, right? So that's iron. This is coal. Again, looking at the December-January period, we're eyeballing this. Okay? That's coal, Australian coal. Is this a bottom? Well, we're not quite there yet, as some will point out, but the question is, do you believe there's more upside than downside? Do you think coal will drop by 50% in the next 12 months? Let me put it in context. Oil is up, what, 70% this year? So let's talk about coal. Is it going to drop 50% or rise 50% in the next 12 months? Yeah, Chris brings up the point, right? Yeah, right? So what if all commodities start to rise? By the way, I just went through iron and coal. What happens if you melt iron and throw some coal into it? What happens? What do you make? Steel. Aluminium? No, not aluminum. Steel. I think aluminum is made out of aluminum, isn't it? Joking. So, there you go. Interesting, right? Australia produces a lot of wheat. Oops. Ooh, that doesn't look good. Is that wheat? Oh, 1 day. Sure. Let's go 1 year. Okay. How about wheat? Does it seem like we have a floor going on? May not be a lot of up, but you notice how it made the higher high? So I'm not talking about uptrends here. I'm talking about floors. Right? Is 450 the bottom for wheat? I mean, this thing was 900 at one point, right? 943. It went from 950 down to 450, right? So at some point, is it going to work its way up to 500 or 600? I mean, 600 is only kind of this level here. Okay? What is that, a 50% increase? So what happens when, generally speaking, oil goes up? That's not really anything to Australia but a leading indicator. But gold goes up. Okay? Iron goes up. By the way, iron ore and coal are Australia's #1 and #2 exports. Okay? Wheat, Australia produces a lot of wheat. Okay? And if other countries start buying this stuff en masse, maybe they're not buying it today, but maybe they're getting ready to. Right? What happens to income in Australia? Yeah, and income leads to a lot of interesting things inflation-wise, right? And if foreigners are buying all this stuff from Australia, we don't know if they are, but let's say they want to, maybe not yesterday, but maybe tomorrow. What happens to the value of the Aussie dollar? Right. So yeah, so I don't know. So that's my only food for thought on that one. Inflation is down and disappointing right now. But I keep asking you, what's your 12-month outlook? Okay? And the next part of that is if you think it's up, and I'm not saying it has to be, I could totally be wrong on this, but if you think it's up, give a couple of reasons. Well, how about Europe fixes itself? How about Japan fixes itself? How about economies start to expand instead of contract and their need for energy goes up at the bare minimum? Okay? Coal, 70% of China's energy mix is coal. But most of the world's energy mix has significant amount of coal in it. 30 and 40% for developed economies, and much higher for those that are in developing. Did I say developing before? But anyways, there could be an increase in coal. There could be an increase in oil. Now we do have lots of supply, so I'm not suggesting it's going to go to 200, but you know, higher is the beginning, right? And as those economies expand, employment expands, right? And then income and wages start to go up, spending goes up. And so I don't know, if you have a 12-month, right, and 60-month outlook, at some point, you know, if you think it's going to go up, now all you have to really do is, well, first of all, identify areas you might be interested in. And then the second part is wait. Okay. Could you have, looking at this Aussie dollar, could you have plans for this? Could you just simply draw your chart like this and say, well, I might buy here, I might buy here, and I might buy here? Miles is funny. So that's why you said in an interview that Aussie would go up. Good, solid fundamental analysis. No. I'm joking, Miles. So whatever, right? Not down is the beginning of the up, right? So I don't know. You could say, well, in the next, how about, I mean, it looks dangerous now, right? You wouldn't want to buy it here. But could you possibly maybe think about it over the next 3 days? Oh, it's going to consolidate. Oh, it will consolidate. It will. It absolutely will. 100% chance of it. At some point in the next 3 days, this hourly Stokes is going to go up. Do you agree with that? somewhere in the next 72 candles, this is going to go up. Well, where are you going to be? If you're a bull, is this a reasonable amount of support? That's probably too big here. If you're a bull, is there any reasonable amount of support? Let's take this kind of area here. And maybe it comes down to 84. Okay, let's call it 84. So let's do it this way. I just want your extra time and your... Okay, how about this? What is the likelihood in the next 72 hours or the next 50 pips that this thing's going to want to kind of turn up? What's the likelihood in percentage? 100% chance, 50% chance, 10% chance? That'll at least go up a bit, at least 25 pips. Yeah, not 100 pips. Okay, how about 50 pips then? That this goes from 84 to 84.50. 84.50 is only here, guys. It doesn't even make a higher high. Okay? 50 whopping pips. I would say exactly the same probability. Okay? So if you're ready in this zone, will you have enough opportunity to jam your stop at or near break even? Zelda, I don't care what it is. You can make it Aussie Swiss franc if you want. Okay? Well, think about it this way. Okay, you're no longer a trader. How about let's change this? Okay, I hope you don't mind me just tearing up the script today. You know, being a Fed day. You're no longer a trader. You're a portfolio manager. And you don't scalp anymore. You don't spot trade anymore. You're basically, you tell me what your plan is the beginning of every month. You walk into my office, I say, all right, what's the plan, dude? Ryan says, yeah, I'm going to start accumulating Aussie dollars. Right now, it's pretty top-ish. And by the way, guys, now I know it's a bit of hindsight. I did show you yesterday that this thing was getting ready to come down. Maybe not, not in the sense of like short it now sense, but that we were getting to the resistance area, right? So what if you say, well, I want this to come down, so maybe over the course of the next 2 weeks, I'm going to start buying at support, jamming stops or hedging with binaries, and kind of look for a turn this way at some point. Is that a different way of trading? You're like, I want to get Aussie, but not at this rate, but I'd like to start holding and accumulating Aussie dollars. So I'm going to let this sucker drop and then start picking my lines. Okay? What if it's your goal, and maybe this is your goal? You can write it on Ryan's wife's chest. Hey, no, he said something before the webinar, but forget it. Come here, baby. I got to write something down. That you want to accumulate a $1 million position. You want to accumulate $1 million in Aussie dollar. And you want to use someone else's money to do it. Right? So what you do is, even if you trade mini lots, oh, Ed's, there's a video on YouTube how to do it. Just type, go to the YouTube channel and then search, a hedge binary hedge or something like that. Forex.Today. Here. Okay. And so what you do is one shot at a time. So on the way down, you're going to have opportunities to buy, and it may not work out. Okay? But if you jam your stop, you're not likely to lose money, right? Okay? You got me so far? And then one day, one of these sticks. Oops. So let's say, come on, drawing tool. All right. So let's say you buy here, and all of a sudden it starts doing this. So the first one doesn't work out, but this one holds. So you make, right? And this one holds, and this one holds, and this one holds, and every single one of them, you just move your stop to break even, and you never touch it again. If you want, you could put it like plus 25, okay? But you have to be up at least 100 pips before you do it, something like that, okay? And by the end of the year, your goal is to hold 1 million Aussie dollars. In your account. You're sitting on it. And you're earning, what, approximately 2%, right? Okay. You can put that down as your goal, like you're actually trying to do it, which forces you to add another, add another, add another, add another, add another. But you can't, buy and lose money and hold that loser and then add another loser and then add another loser. I didn't say that. Okay? So Ian's now talking about locking in profit and stuff, and that wasn't my stated goal, right? So you could do that. That's fine. And it's not even really the carry, because 2%, come on, it only sounds good relative, to the rest. But aren't we trying to build skills and habits that don't exist in your repertoire right now? So this is something like just to shake it up, right, Ian? Just to change your mindset and the way that you're looking at your charts completely. Right? No, I know what you're saying. So in this case, you could have a goal like that, and maybe you would rather try it on Kiwi. Fine, but we're talking about Aussie today, and if there is a bottom in commodity prices going on, right? Then maybe eventually commodity currencies go in that same direction too. Kind of makes sense. And to shake it up for you a little bit, you're going to have to enter, either 10 or 20 or 30 or 40 or 50 or 100 trades, depending on your lot size, one at a time, and simply hold it. Okay? But again, I'm not even talking about carry. What I think would be interesting is that you observe perhaps how crappy your trading is now. Right? Oh, come on, don't get upset with me. Because if you change your habits, what if? What if you do this and it's just an exercise and you're doing this, and all of a sudden you have your first 1,000 pip month, and then you have your first 5,000 pip month. What if doing this exercise you nail down your first 10,000 pip month? I still remember my first 20,000 pip month. And you're like 20,000, 10,000, 5,000. I mean, you're not even there, right? It's not even in your universe. You don't even know you should know, right? And that's what I'm trying to do. That's what I'm trying to do. It's a complete, if you don't mind me saying it, paradigm shift. And then you might say, holy crap, and I'm trying to make 300 pips a month? Okay. Yeah, well, the reason is you're letting your winners run, but you're also adding and 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 adding. I mean, come on, dude. Pound yen is up 1,000 pips in the last 7 days. Okay? So between now and the end of the year, if you had 10 trades open, one good week is 10,000 pips. Now, it's a really good week, but you might not have a 10,000 pip week to talk about. So let's just shake it up. Just freak out. Just do what you're not doing now. Okay? Yeah, so Nick brings it back to kind of the focus. You know, I'm not saying it out loud, but what I'm saying is, you know, what I'm saying indirectly is that you have a bias. And that you trade in the direction of your fundamental bias. Holy smokes, but I've been saying that for 15 years now, right? So I'm kind of getting there where you decide that you want to try for whatever reason to set something up like that. Okay? Now, remember this Aussie yen move at 86? I set this up for you at 79. How many people can confirm that we were long at this at 79? I mean, literally in the market. Okay? And I think, now, correct me if I'm wrong, just don't back me up just because you're loyal. Back me up if I said the target was 87. Wasn't it 87? I think it was 87. Now, I didn't make it to 87. It made it 86.5. Okay? And of course, this drop here would have been, you know, Heartbreak City. Okay? Okay? Yeah, I did get out. Oh, I only made 300 pips because I got caught in this consolidation here. And just, you know, I don't know. I had just done a lecture on hope's not a strategy, so I figured, you know, I kind of have to live up to my own lecture, right? But anyways, nonetheless, this was teed up for you, right? So, and you know, and this price action is incredibly difficult. You're likely to be knocked out. Okay, so I'm not saying anything about that. But if you had a bias, okay, and you focused over the next 6 months, 9 months, right, 8 months, to trade it and build positions in that direction and do it one at a time so that you're never taking any significant risk. And in fact, I'd like you to have like 25 trades open with 100% available margin. The only way to do that is to have 25 profitable trades. Nick says, Wayne, would it be crazy to play the short side? I don't want you to do any of that. Okay, now you're trying to be smart. I don't want you to be smart. I want you to practice. Okay? So the first part is to learn from the experience. And yes, the experience could have, wicked, horrible retracements. Okay? Well, that's part of the learning process. So maybe next year, Nick, or the year after, you work on that. But you're really good at developing long-term technical or fundamental biases and trading in that direction. And then you're like, well, maybe I should hedge this. And you don't really want to hedge this way because it complicates things with all the stops and all that kind of stuff. So maybe use a different currency pair with a super high correlation, or maybe use binary options or futures contracts or something else, and or maybe you have two accounts. One is short-term only, and the other one is long-term only, and you start working on that. But I'd rather you worry about that after you've mastered the first one. Okay. Is there any other way you think you can make 10,000 pips in a month? Can you do it scalping? Probably not, huh? Jimmy says, is this strategy typical after January yen strength? How about this? Let's say it differently. Last summer, I spent the entire month teaching people how to set up a portfolio like this. And I begged people, I mean, literally, we talked about it for hours and hours and hours, not to take profit on any trade in August. Not even try to make money. Just to say, just throw yourself down at the mercy of the court and say, I'm not going to make money this month. But, if you look at what you did last August, you probably didn't make money anyway, so who cares, right? Not because you were a bad trader, but because the market likely didn't do anything. It's August. Okay? All the Swiss have gone on vacation, so they can't lie to you. So, what I ask people to do is simply do what we're talking about here, but this was in August. And do things like Aussie dollar and USD yen and various other things that we had looked at. Okay? Was it better to take profit? Absolutely not, Miles. So in the month of July, we talked about shooting at rabbits. We're going to have rabbit stew and rabbit casserole and, rabbit burgers. And we're just going to eat a lot of rabbits. Rabbits, 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 rabbits. And then in August, we're only going after big game. No more rabbits. Okay? That was the whole plan. Okay? Okay. And so anyways, so that month of August, all we did was buy dips, move the stop to break even, and do nothing. And I believe the goal was to get 20 trades open. And that we were going to make our money. I mean, you're going to make money, but not in August, but you'll make your money in November or December. And I said, you want to stay in the trades bare minimum until Thanksgiving, but depending on how Thanksgiving can go, it might knock you out, right? Or it may continue all the way to Christmas. Okay? And how many people were around for that? I mean, we spent every single day in August, and I think it was like a 5-week month, right? It was like 25 trading days. That's all we talked about. Was anybody around for that? Anybody? Okay. And I think if you would have held on, let's say you had 20 trades open, if you would have held on to the end of the year, I'm certain you would have made 25 to 50,000 pips. You would have averaged 10,000 pips a month. I'm certain of it. Right? That's only 500 pips a month per trade. You know it would have easily done that. You know it. But not if you're picking up trades where you get a good trade in and you take 25 pips profit. And you're like, yeah, I made 25 pips. Yay. And the next day you're like, man, I had a great day. I'm up like 50 or 75 pips. Holy smokes. What a great day. Right? Keep that up all month and you might have 700 pips. Woohoo! Versus, 10 or 15,000, right? So that's what we were talking about at that time. And so, I don't know, maybe we try some of this. Now, what we're talking about now is being patient and trading in the direction of your long-term trend and stuff. And maybe we're quite early, and I'm usually very early in my analysis. So maybe we're not quite there for commodities, but I am ready to start considering it. Zelda, well, again, so Zelda says with those open trades, do you move your stops up and then get knocked out? Well, why don't you just do the first part this year, see what you learn, and try to improve next year. Because usually what happens, Zelda, is you mismanage your stops and you knock yourself out, and you feel really good because you made 1,500 pips for the month. You're like, man, that worked out really well. But if you would have just left it, you would have had 10 times more. But you don't know, right? So I'd just say try to set it and forget it. Just see if you have the capability of leaving the trade open from August through September and October until the second week of November. And you could say, you know what? This is my first 10-week trade, right? And the goal is a minimum 1,000 pips per trade. But the first part of it is you want somewhere between 10 and 20 trades. So you see what I mean? Like, let's just completely have different focuses. Don't even try to make money. Don't even try to manage it. Don't lock in anything. You're trying to learn. You're trying to make money 5 years from now. So if you keep doing what you're doing now, 5 years from now, you're going to still be the same trader that you are now. You'll just be 5 years older. I'll introduce you to my father. He's been golfing for 25 years on a weekly basis, and he's still the same golfer. He's not any better. So, in fact, I kind of think he was a better golfer 10, 15 years ago. So, right? So wow. Okay. So you want to be a better trader 5 years from now. So let's focus on that. Don't focus on today or tomorrow or next week. Let's focus on 5 years from now, right? So what are you going to do this year to just blow your mind and just put you up into a whole different realm of even thought towards the foreign exchange market? Well, that would be my advice to you, okay? Is that right, Dwayne? Sweet. So now Zelda, now that's going to be a question between you, your God, your financial advisor, your tax attorney, your spouse. I don't know what you want to do. Okay? But that's always going to be, yeah, but I charge a fee. Maybe not for these events, right? So I guess, yeah. So anyways, so maybe, and you could spend the next 3 or 4 months trying and not get anywhere. And I've done that. That's how it goes. Whoops. Spent 3 months and got nowhere. Uh-huh. But look, at least you have a strategy. Because we know you could spend the next 3 months losing money. There's nothing wrong with spending 3 months trading in the direction of what you believe the fundamentals trend is and is going to be. And you're trying to build positions and make logical, intelligent decisions and kind of get knocked out on volatility or lack of volatility and sideways markets, and you buy at support and it goes up for a while and comes back down, knocks you out at break even, but at least you're managing your risk. I mean, again, you're putting yourself in it to win it, but keeping risk zero, which means you're going to get knocked out a lot, but you're not going to lose any money, but you're in it to win it in the right direction, in which you're either zero or hero. And you could work 3 months and not make any money, but we already know you can work 3 months and lose money. So which one's better? At least you had an opportunity to win big. And then when the overall market forces come back and the long-term fundamentals do kick in, you are heavily positioned in that trade, you know, in multiple currency pairs and for multiple reasons, but all the stops locked at break even, and all of a sudden the trend does take off. So you go 3 or 4 months making hardly anything, maybe nothing at all, and the next 3 or 4 months it's just raining money, right? And then your wife is driving a yellow Lamborghini. Whoa! Miles says, is it enough to move your stop loss to break even after only 20 pips? Yeah, if you're scalping, Miles. Come on. So anyways, you know, no, right. So that sounds, no, that sounds too close. A 20 pip stop sounds like you're scared. And remember, professionals are not scared. What's the right time? I don't know. I don't know when you entered. I don't know why you entered. I don't know the amount of risk you took when you entered. I don't know if you're buying dips in an uptrend or buying, you know, buying dips in a downtrend. Okay. So depending on the setup. So, you know, even 150 pips. Okay. Okay, I've mentioned that many times before because that's usually more than a whole average daily range, which means I'm going to need to be wrong for probably, you know, 35, 36 hours maybe, and then get knocked out. Probably not, right? Could I be wrong for 36 hours? Yeah, I don't know. Okay. Better to use longer term swing highs and lows? Well, you know, I don't know. Is it better? It's just, you're just changing the time frames. So like when I'm showing you these commodity plays, some guys are like, hey, well, why don't you wait for the higher high? Well, maybe I did on the smaller time frame. I'm already in. I already got 5 trades in long, and I've got all my stops at break even. And you're thinking, well, maybe next week you'll get in. You know what I mean? And you're like, okay, well, by the time you get in, I got 7 trades at break even. So you just make your decision and pick your time frames and that kind of stuff. So maybe I'm just on the clue train 3 months before you are. That's all. Doesn't mean it can make it better. I probably took more risk associated with it. Okay. Oh, I see what you're saying. Then just 20 pips. Yeah, sure. But you know, the best thing is you make a decision, and if you want to buy a dip, you buy at support, and you move your stop to break even. And if it goes up to resistance and collapses, well, you'll get knocked out at 0. Oh well. And if it makes a higher high, you're a hero. Hallelujah. So anyways, I thought this was going to be a short meeting. Here it is, an hour or so. So there's the thought process. So I don't know what the Aussie dollar is going to do, but I know I need to make decisions. Am I going to buy a dip somewhere between 84.50 and 84.00? Yeah, maybe. Okay, so to give you guys, to whet your appetite, what if I long right after a 5-8 cross when this is rising? You see what I mean? Am I a fool if I did something like that? To buy a bounce at a midpoint cycle level on an hourly chart with an hourly 5-8 cross with an hourly Stokes. Would I be a fool? Because remember, if it doesn't do that, I'm not in. And then I could say, well, I don't want to wait that much. I don't want to wait that long because that'll put me in closer to 85 by the time I get it. So why don't I trade the same pattern on a 15-minute chart? Oh, snap. So I could say, all right, so maybe somewhere around the New York Open, I do that because I would be rising on the 15-minute chart, which should pull the hourly chart up, right? So what would happen? This would go up to the central pivot, 85.00, 55 EMA, probably come down, double bottom, and then head back up, which is the hourly. So this thing's going to go up, down, and up, down, and then up, right? You know it's going to challenge this, and it's going to respect it. Oops. Right? I mean, you know it, right? And then this is going to play, right? And meanwhile, I'll jam my stop right here, maybe when price is up here on the second move, and I'm long at 84.62 because of my spread and stuff. And my target is 100. Right? If I can get 8 trades in over the next few months, I got my 10,000 pips. Easy. 8 trades over the next 42 weeks. Sorry, 36 weeks. 8 trades over the course of the next 36 weeks. If I can't do that, then what the heck am I doing? Right? I have to average 1 trade every 4 weeks and one profitable trade every 20 days. I can do that. Okay. So anyways, food for thought, guys. Just trying to shake it up, blow your mind. right? Have a long-term goal. Don't be in it for a quick buck. Think of it as an institutional investor. Build a portfolio. See if you can get your first 20 trade portfolio built based on long-term technicals and fundamental analysis. Jam the stop and let the winners run and 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 run. And what if you don't even take profit and you let it run for 3 years? And you're like, yeah, I'm up 200,000 pips. Nice thing is, if Australia does raise interest rates, which maybe it won't for a while, but maybe it will, then you just get you get an increase in income. Because remember, if you buy an Aussie bond, let's say you buy a 10-year Aussie bond and it pays you 2.8%. Will interest rates be higher in Australia 5 years from now? Yeah, I think so, right? So if you had a 10-year bond, are they going to increase your income because interest rates have gone up in Australia? No, but the value of your bond will fall. Well, that doesn't sound good. If you're in a cash position worth 1 million Aussie dollars, it's the same as an Aussie bond. You got your stop at break even on all the positions. And if interest rates go up to 3% or 3.5%, guess what? Your income goes up. Yay! But you're also getting paid on pips. Holy smokes. Right? Holy smokes, right? And how much are the pips worth? Like I said, right? Your spouse is going to be driving around in a yellow Lamborghini. Yeah. So anyways, peace on earth. May the pips be with you. May our profits be above average. Thanks for being on my team. Right on Zelda. Zelda says a light just went on. Well, that's the whole point, right? So thanks for hanging with me and making the use of technically a dead day, but I think we squeezed some blood out of the stone, didn't we? Fred was so amazed that he fell down and hit his head on the desk and missed the last 30 minutes. So yeah, Fred, I'll put this on YouTube. Take care, guys.